Forget everything you know about trading and focus. Some of you have been trading the market for an extended period of time, but you find it confusing why you have never made a single dime from the market. And you may think is because you are not analyzing right, or you are not getting the trend correctly, or maybe your risk management is ducked up. But the truth is that it has nothing to do with any of that. It is because you are missing one key concept of the market. And I called this direction. The real direction of the market has nothing to do with an uptrend or a downtrend. It has nothing to do with an area of supply or liquidity zones in the market. This is the main movement of the market structure. And to further explain this concept, I came up with a strategy that I call the directional earner prototype. I used this trading strategy, and it completely changed my trading game. And in this video, I am going to be dropping bit by bit the step-by-step process on how we are going to use this trading strategy, this same strong loophole that I've discovered, and I will be teaching it in such a way that even a rabbit can understand. But before we get to the amazing parts, do well to like this video and subscribe to our channel if you are encountering us for the first time. Now, my tribe, let's get down into this business. The first thing we see when we open our chart is a scattered price movement in form of trends. Now, the problem with this trend is that you don't really know if the market is going to continue going up or down, because most times, and a lot of you will agree with me on this, that the trend movement that you see on the lower time frames that you trade are a result of small retracements that formed on the higher time frames. And you don't know when the market is going to retrace and start moving in a complete new trend, or if it will keep moving in the current trend direction. This is why the trend does not play the major key role in getting the direction of the market. And since analyzing the uptrend or the downtrend of the higher time frame, together with the trend movements of the lower time frame, trying to get a top-down analysis has been confirmed to have only a 20% win rate in the market. So we are stuck with trading with what we can see on the lower time frame as day traders and scalpers, and that's the best time that we can make profits. Now, in order to get this direction, we are going to combine two things in the market. First, the trend movement, and then the other block zones. The market trend movements will help to give us a clue to the direction of the market, while the order block zones will give us the main direction of the market. So, in the normal movement of the uptrend and the downtrend, we want to see the market moving in higher highs and higher lows when we are in an uptrend, and we want to see the market moving in lower highs and lower lows when we are moving in a downtrend. This is the typical price movement of the trends, and like I said before, the uptrend or the downtrend plays a minimum role in giving us the real price direction of the market. So after getting the trend direction right, and I'm sure you all know how to get that trend direction correctly, but if you don't know how to get the trend direction correctly, you can watch this video here to learn that. Now, when you get the trend right, the next thing that you should look out for is a retracement. This is the sweet part about trending markets. Once you can get a good retracement, you are going to be able to get a good direction in the market. And when I talk about retracement, I am not talking about seeing little retracements like this one here and this other one. If you are looking out to get a great direction in the market, you need a retracement with which you can get directive opportunities, a retracement wide enough to give you setups inside the retracement. Now, the issue when you are trading with little retracement like this is that the market will move really fast if it's going straight to the dominant direction, and you won't be able to understand where the market is really going to. So if you follow a little retracement like this one, you're going to be stuck between candlesticks because you won't be able to find a good setup to trade it. So the best way to trade the market is to wait for a wide retracement like this one. And when you have such a retracement like this one, something like this, and also this type of retracement, take note of them. Then be on the lookout. You are getting closer to a successful trade. And at that point, you are looking at the promised land from the hilltop. But the only thing standing between you and that promised land is an order block setup. Now, some of you don't know much about this other block setup, but if you disobey the rules that you're about to receive right now, you will never get to that promised land. There are only two types of order blocks that gives us great direction in the market. We have the base order block and the flip order block, but on this strategy, we are going to be focused on the base order block. The first type of base order block that we have is derived from a supply and demand pattern, but this is also an order block. Now, the way we do this is that we wait for the market to create a price movement like this one, and as it begins to retrace, we draw a box on the wicks of the lower candle of this first price movement. Sometimes the box can be drawn based on other scenarios or candlesticks, but concentrate on this one. So what we are expecting is that when the market returns to that box, we can take a trade, either by placing a limit order, which I clearly never endorse, and then the second way is by waiting for an entry candle like the engulfing candle before we take a trade, and that's after price touched the box. This second one is very good, and this is the typical way of trading the order block. But this way of trading the order block is very, very low in profits percentage, and it has failed a lot of times. Yes, it works sometimes when you trade it with the engulfing candle or the other entry candles that we use for order block trading. But I found a better way of trading this order blocks in line with the trend. This method is the best way of trading order blocks in line with the trends. This is the main price direction in the directional earners prototype. And like I said before, when we are trading the market, we need to move in line with the main direction of the market. And the way we do that is by trading the other block in such a way that we know exactly where the direction of the market is going, even before we trade it. And to achieve this, we are going to be trading a type of order block that I call the trending order block. This is the type of order block that we get from a small trend retracement of a new trend, which is formed inside the price movement of the main trend retracement. For example, since this one is an uptrend, we want to see another uptrend formation inside this uptrend retracement that we are trading with. I believe you all know the three-step price movement of a new trend formation. We have this, then this, and this. So now we have an uptrend inside an uptrend. And when you have that already, all you have to do is to draw a box from the wicks of the candles that are at the higher low. This is what the market is going to return to before we consider taking a trade. Now, when the market has returned to that handsome box, we look out for an entry candle. The best entry candle for this trending order block setup is the pin bar and a strong momentum candle. For the pin bar, you all know what the pin bar looks like, that massive decline from the opposite side of our direction. And for the momentum candle, this is a candle that has a big body with almost zero wicks, meaning that the body is always larger than the wicks. When we have any of these two entry candlesticks at the box, we can take the trade with confidence. And right here you can see that we have a pin bar at the box. We have reached the promised land. So when we see something like this, we can take the trade, placing our stop loss below the pin bar and our take profit target at the high of the main trend retracement. And as you can see here, this trade was a successful one. Now, let me show you another example of this strategy at work on the chart. So right here we have the main market trend catwalking in a downtrend. And since we have that, we wait for a large retracement, such as this one. And in that retracement, we want to see another downtrend formation. And right here, you can see that the market started moving in a downtrend. So at this point here, we draw out a box on the wicks of the lower high of this new smaller downtrend formation. And when we have done that, we wait for an entry candle to touch that box. And right here, you can see that a pin bar appeared after the market touched the box. So you can now take a trade here, placing that stop loss above the pin bar and our take profit target at the low of the trend retracement. Now, let's see another example of this setup on the chart. Alright, on this example here, the market is moving in an uptrend, and since we have that, we look out for a good retracement from the market. And after the retracement, you can see that we have a mini trend here. See the market moving in higher high and higher low, which now gives us an opportunity to trade. So we draw out a box from the higher low of the new trend retracement, so that when the market returns to it, we can take a trade. And right here you can see that when the market returned to that box, a strong momentum candle appeared, meaning that we can take a trade after that. So what you do in a situation like this is to place your stop loss at the last low of this new price movement, then place your take profit target at the high of the main trend retracement, and that will give you a perfect trade. This trading setup will give you everything you need to become a profitable trader. From this day, you will start ripping the fruit of your labor. But there are two important things that you should always take note of before trading this strategy. The first one is, you should never trade this strategy on more than one time frame, at one time, on one asset, meaning that you should never do a top-down analysis on the asset that you are trading while using this strategy to avoid price conflicts. And the second one is that you can trade it on any individual time frame in the market, but you must not go below the 5 minutes time frame. For example, if you are a day trader, I advise you stick to the 15 minutes time frame. And if you're a scalper, you should stick to the 5 minutes time frame. Those of you who do swing trading, you can trade it on the 1 hour time frame or the 4 hour time frame. Just make sure you focus on one time frame and never trade it on the 1 minute time frame. Now, you have received a very powerful trading strategy. Make good use of it and backtest it thoroughly on the chart before you start using it. Now, in the next video that will appear on your screen right now, I will be teaching you the best 5 minutes moving average trading strategy that works every day in the market. If you have ever wanted an efficient moving average trading strategy for scalping and day trading, this is the one. Enjoy it, and I will see you in the next one.